Okay, good morning, folks, and welcome to Swing Trading Today. We just completed a review of the higher level view of the markets and where I believe that there are support levels on this market with members on a morning update. It's posted on the blog for those members who are just checking in now. So let's kick things off with the Nikkei. The Nikkei is up right now. We have these are all 4-hour charts. We have a bullish reversal bar on this 4-hour chart. It's 4:53 in the AM here. There will be a new bar that opens up in 7 minutes from now. So this is a fairly strong reversal bar, and it should portend higher highs today for the Nikkei. Note on RSI, we're putting in higher lows. No higher highs yet, but it looks as though we're getting a bit of a reprieve on selling here in the very short term. And we might even have some resistance here at the 21,663 level on the Nikkei. But it's not the Nikkei that's driving the market, right? What is driving the market? It's several things. We have not only geopolitical risk, we have, frankly, anarchy going on ahead of the midterm elections. And we also have anarchy taking place over in the EU. The battle of the Italians and the EU, as well as the British for that matter, continues. Let's go to the U.S. futures market. We have the NASDAQ, which is up over a percentage point, nearly 1.25% on the morning. Do I think that this is the bottom? Perhaps in the short term, but honestly, when you wake up after a big sell-off as we've had in the markets, rarely is a bottom created when you have bright green futures. Normally, you get capitulation and then a reversal day. We don't have that yet. So might we rally? Sure. Do I think that rally is going to fade? In all probability, yes, and we'll be looking to short the market. We've just discussed that I believe that there are opportunities to the long side. We do have a list of ETFs, stocks we're looking to add. We did some buying the day before yesterday. We'll be looking to buy some more. We're taking a very prudent approach to this market. We lightened up dramatically across the board on all long positions. The only serious long positions that we hold right now are the gold miners and some silver. And a single microcap stock that is just holding support. It really has been unfazed by this selling, knock wood. Let's go to yields. This is the 10-year Treasury note. So when you see a red bar, that means yields are rising. They are down on the week. We are, for all intents and purposes, flat overnight. We did get overbought on the 10-year Treasury note. So expect a consolidation, if not a further continuation pullback. That means that yields will probably move a bit higher today, or at least stay flat on the day. S&P futures, very similar to the NASDAQ in terms of price action, underperforming in terms of gains on a percentage basis. But there are reasons here to get a bit optimistic, very short term. Again, I don't think any rally is going to last. However, there's been a lot of damage done here. And there are opportunities, at least for a short-term swing trade. And you can see we have a higher low on the S&P futures, and we are beginning to poke out on RSI. Now, we've been here before, and it failed, but we are forming some support here. But remember, this is a 4-hour chart, and you don't want to base your investment decisions on a 4-hour chart. Perhaps a short-term swing trade, and then you move to the sidelines and you defer to your daily, weekly, monthly charts to identify where there is historical support and historical resistance. Now, the new bar at 5 a.m. Eastern Standard Time just opened up, so we'll be looking for a new higher high, and that will dictate how we open up this morning. So I think that we will have a positive open, but it doesn't matter where we open. What matters is how we close. Dow Jones Industrial Average, very similar to the S&P and NASDAQ. Taking a look at the currency markets, the US dollar. It closed off the highs of the session last bar. Because the last I looked at it, it was very strong. It was flashing a bullish reversal bar, implying that we would probably see higher highs. That has waned a bit. We've pulled back off the highs of the morning. So what I'll be watching for here, for an indication of which way the dollar is going to go, is to see whether or not this support level here holds, or do we break out above this upper band of resistance? Why does the dollar matter? Well, remember that the S&P 500 stocks garner much of their profits from overseas sales, roughly 50%. So if the dollar is strong, it makes U.S. produced goods and services more expensive overseas. Also, we are long of commodities. So gold is priced in US dollars. So if the dollar breaks down, that should help gold. Now lately, gold has been holding up just fine in the face of a stronger US dollar. That is very, very bullish. Oil's been doing that for over a year now. That's broken a bit in these past several days. But the fact that gold is rallying in the face of a stronger US dollar is very, very bullish for gold. That is a contrarian indicator. That is a signal by the market that there is accumulation of gold and even of silver, which is also broken out. You can see here we had some resistance. We broke out here on this 4-hour chart, rallied, pulled back, retested, rallied, pulled back again, retested. So what we're doing here is we're consolidating and we're looking for a breakout of this pennant formation. And a continuation breakout on silver on this 4-hour chart will send us right up here to 1488 on the spot futures price expiring in December. Checking out oil, attempting to consolidate here, and we are beginning to break out. Remember this bar just opened up right here. It's hard to see, but we're poking above this upper band of resistance. Let's highlight it. We're attempting to poke out above this upper band of resistance. Let's watch for a breakout. We're not going to know whether or not it's successful for several hours from now. Right now, all we're doing is flirting with it. A break below 66 on the crude oil contract. That would be very, very bearish. And we would have to avoid, like the plague, oil. But at current, we're beginning to poke out above this upper band of resistance, which is short-term bullish, very short-term. Okay, now let's segue over into member stock chart requests. We're going to begin with Deutsche Bank. You can do a search on my blog, and you could just type in DB, and you'll see that I have produced more commentary with regard to Deutsche Bank over the past year than you could shake a stick at. And by and large, that commentary, 99.75%, has been bearish. And I have warned over and over again that this stock is weak and getting weaker. I did not believe that this support level would hold. And I warned, beware of the single digits on Deutsche Bank because it is a money center bank in Europe, the largest in Europe, and it has counterparty risk to every single bank in the world that's considered a money center bank. So what happened this week? This is a weekly chart, if I didn't already mention that. We broke down below the lower band of support here. What was the low of the week until they salvaged it yesterday? $10 per share, right on the money, because they know exactly what's going to happen. This thing closes down with a 9 handle. This is bad. This is really, really bad. I mentioned earlier, you have a lot of anarchy going on over in Europe. Look no further than their banking system. It's an absolute nightmare. And it's not just Deutsche Bank. This is Credit Suisse. This is a Swiss bank. Annihilated. Look at this. This is The market's sending you a signal. It's telling a story that the banks in Europe are in big, big trouble. So in looking at these charts, you need to expect some sort of intervention by their central banks. And keep in mind that Switzerland is not a member of the EU. Let's go to the daily chart. RSI 14.41 on Credit Suisse. Volume rising sequentially. This is bad, bad stuff. I'm not going to be shocked to see a rally here, but absent some sort of government intervention, these shares are going lower. This is a lack of confidence. Facebook, one of my favorite social justice warrior stocks, and they still don't get it. They want to be shills for the leftists in this country and in the EU, and they're going to lose their business, and they have no idea yet. For all the Harvard MBAs and MIT graduates over at Facebook, they have zero idea of what they are doing to their company. It's absolutely shocking. And it's not just isolated to Facebook. We have now closed down below 149.02. We closed out yesterday at 146.04. We close out the week below 149.02. We're going down to 144.56 in a heartbeat. We could see it today. Daily chart. Look at this price action. We broke support yesterday on rising down volume. We're going lower here. We're rolling over on Stokes. We're going lower. And again, with Facebook, you can go over to my blog, type in FB, and you see all my negative commentary on Facebook going back months. And a lot of this damage, while yes, market related, but most of it was self-inflicted. HE. I've been bullish on HE. This is a utility stock. The utilities, despite the fact that yields have been rising, have been holding in really well. We broke out the week of September the 24th. We've been consolidating. I think we're going to break out here. I like these shares. We are slightly off the highs of the week. But if we close at or near the highs, and especially above 36.50, it's off to the races. Fitbit, daily chart. So we had a reprieve rally here. We peaked out on the 16th of October. And this is what I mean, what I'm looking for in this market. This is a microcosm of you need to draw your trend line down. Don't short into the selling, short into resistance. So I would have shorted here. However, while we had bearish price action yesterday, unlike the rest of the market, we haven't broken down to new lows on the year or on the month for that matter, on the month. So what I'd be watching for here is a reversal bar off of this 446 level or a higher low. If we hold and volume begins to drop off dramatically, you may consider opening up a long position. I would look to see whether or not you have a lot of shorts waiting to get squeezed here. If you don't have that and you don't have a really sexy valuation, you know, there's other extreme oversold stocks out there that are setting up better technically. However, if you like the shares, you see value here, then go for it. However, if we break down below 446, you need to avoid the shares because they're going a lot lower. Now, RSI and Stokes continue to put in lower highs. So in this market environment, it's going to be tricky for the shares to hold 446. And again, if we break down below it, you need to avoid the shares. Unless, of course, they reverse to close back above $4 and let's call it 50 cents. Give yourself a little bit of room. The next chart, Disney. All right, another social justice warrior stock. What do I mean by that? I keep saying that. All of these companies, S&P companies, for God's sake, some of the smartest people in the world running these companies, and they feel obligated to jam leftist crap down your throat when you didn't ask for it. All you want to do is go watch a movie. And what did? They bought the Star Wars franchise and they trashed it. And these are the chickens coming home to roost. We broke down hard yesterday, really, really hard. And I think that we're going to break down below. There's lower band of support here. If we come down to 110.32 and close down below it, We're going down to 108.23. If that fails, it's all over for Disney. And that's exactly what I think is going to happen here. Lower highs on RSI, lower highs on Stokes. There's nothing good here. Volume. You have institutional selling. To buy these shares at this perceived support level right now is throwing good money after bad. I would avoid the shares like the plague, at least in the short term. If this support level holds, great. I'll talk to you next month. Let's revisit it. Right now, avoid. Amazon. The only reason why this is in the social justice warrior club is because Bezos is so arrogant. He uses the Washington Post to club a sitting president who's just as vindictive as he is. Good luck with that. So you have RSI making lower highs, lower lows. Stokes making lower highs, lower lows. I warned the other day that if we fail to hold the support level, we're going lower. We did fail. We are breaking down. I think that we are going lower on Amazon. Despite the morning futures, I think the air is going to come out of this stock in a very, very big way longer term. Simply take a look at the weekly chart. We have broken key support. The upper band of resistance is now broken. Amazon is officially a broken stock. I think that before we get a real serious rally, we're coming down to 1,500 on Amazon. I'll see you there. Set up an alert on your trading platform. Revisit it then. The EDC, Emerging Markets Bull ETF, I like it. Not yet, though. It's been damaged quite a bit, but not enough. You have the dollar, which is rallying. That is not good for EDC. In all probability, we are going lower here. I would not buy, but it is on our watch list to go adding. We're rolling over on Stokes, rolling over on RSI, double top down below the 50 level. We're probably going to go a lot lower here. To identify where there is historical support, let's go to our weekly chart. I think at a bare minimum, we're coming down to 57.45 on the EDC. We'll set up an alert. We'll revisit it then. No sense of watching it between now and then because we're simply not interested. And if that support level holds, which in all probability it will, I'll see you down at 53.57, which is last seen back in May 2016. Google, another social justice warrior stock. They've deemed themselves to be the free speech police. Hammered yesterday, down over 5%. How's your business model treating you? These guys, along with Facebook, Amazon, were printing money. Look at you now. How the mighty are falling. Weekly chart. I think that we're going down to, at a bare minimum, $1,000 per share here. And I know that's 57 points away. We could be there today. I think we're going lower. I would avoid Google unless you're going to short a rally. SFIX, Stitch Fix, daily chart. I would avoid these shares. We're in a downtrend. We gapped down on the 1st of October. We did rally. We pulled back, attempted to form a base. That base has now failed. Next support level, you could argue, would be where we bottomed out here on the 11th of October. And maybe it'll hold. Ideally, I would like to see a low put in here at around $20 to $21 per share, which is where you have more serious support than where we bottomed out on the 11th. We're rolling over on Ultimate Oscillator. Stokes are actually looking pretty good. So I would not buy these shares. I would wait to see whether or not these support levels down below hold. Because if this support level breaks, we're coming down here to an 18 handle. So be very, very cautious. We're in a downtrend. Let the shares come to you. You're in no obligation here to buy and hope. Your obligation right now is to fear and to wait for the shares to come down to you. And trust me, they will. Just show patience. That's it for this morning, folks. Everybody have a profitable trading day, and I will talk to you soon. Be well.